There is one chart that is absolutely on my radar for tomorrow with Powell out of the way, a better idea where we're going to sit with the upcoming rate hikes, of which there might be two, but this is what I love. We should still see contracting real yields as the nominal yield of a bond and the rate of inflation continue to narrow. And that should give us a green light for a resumption of the uptrend in gold. That's the hypothesis, gang. And so let's dive into what we've got here. For those of you who don't know me, I'm Raghee Horner. I lead up Simpler Futures and the Sector Secrets Mastery, and I'm coming to you with a gold idea based on historical volatility overlaid on the 1 hour and the daily time frame. These are daily price movement ranges. These are price movement ranges that are determined after a 6-month look back of typical movement, giving us volatility-based support and resistance. And while the zone will shift a little bit as we go into Wednesday, February 8th, the zone should not be that much different because the two ranges are pretty similar. So I'm not seeing a very large contraction or expansion of the range. That means we should be in a very similar area to where we are right now, which is sitting at 1873 to 1862 for a potential buy zone. I do want to be a buyer. Tomorrow, when I have the new daily price movement ranges on the chart after we crunch the numbers, join me for Charts and Coffee at the Simpler Trading YouTube channel, and I'll be sure to share the zones that I'm looking at for gold. This would also extend to micro gold and the GLD ETF. So really like this potential setup based on volatility going to the long side. Now, what I would also like to see join up with this setup is a neutral 1 hour chart of the long bond and some support. So there is a little bit of a headwind here, which is the long bond yield continues to go up because these futures are heading lower. That's the way the yield works. The other thing that I would look at is what is the dollar doing? We'll do that through the prism of the 6E. 6E is trying to transition out of the downtrend and into a more neutral standpoint. And we can see here the DPMR is slowly heading lower. Dollar strength is going to create euro weakness, but if this doji is telling of possibly a pause in the movement lower, this bodes pretty well for that gold setup that I was talking about earlier. Let me show you a little bit. So you might say, Rog, what does a setup like this actually look like when price gets there? Now, this is a wacky one because this is with Powell on a very volatile session. But you can see here on the noon Eastern candle, now this is actually a really good example of how well volatility ranges work. When Powell started speaking, this is the candle that would have been most affected by that volatility. Here we have, boom, right there, entering the support of the daily price movement range and then shooting up into the resistance of the daily price movement range. So these are the kind of things I'm talking about. This is on a 1 hour chart, but this is what I'm talking about. Can we sink down into that range and start moving higher out of it? And if we have a bullish bias, which we do on the S&P with the green overall uptrend, looking at parking a limit buy or an alert so we can buy SPY, or for those of you that like to sell premium on the SPX, let me ask you, when ES sinks down with volatility into the daily price movement range, and we know the market is neutral and, thank you slow stochastic, oversold, do you think you got an edge and selling some put premium here, only to see it just absolutely move in your favor as the puts become far less valuable, if not right, as we see the movement back higher out of the support zone? Lots of ways to trade this. I'm showing you an example on gold. This is something that happened on the S&P today. All right, gang, so this is what I'm looking at. Hourly price movement ranges, they're not going to need as much attention, as much time as the 5-minute day trades. This allows us to be more nimble, focus on short-term swing setups with usually a week or less expectation for being in the trade, but they're intraday so we can be nimble, but they're longer term so we don't have to babysit these, and they're happening slowly with that 1 hour candle. All right, hope that's helpful. That's what we're looking at here today. I'll see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.